Warwick, it appears as we speak that economic climate change policy in Australia is to some degree up for grabs more than it has been for quite a while. The government's facing heavy criticism over its proposed carbon pollution reduction scheme and is likely to face a difficult time getting it through the Senate. Wondered if we could just go through what some of the criticisms of the scheme have been and whether you think they're legitimate.
Okay. Well, the first issue and the premise on which the CPRS is based is the idea that we have to target emissions year by year. Once you take that as the premise, then you design a market system around that idea that every year we have a cap. The problem with that is that you don't know what that will cost year by year. The second problem is that no matter what you do to reduce emissions elsewhere in the economy, emissions will be at the cap. And this means that if you have supplementary measures, the emissions in a particular year won't go down. The cost of carbon will go down. So there's a whole series of problems with the cap and trade, and the CPRS is not a simple cap and trade because the designers realised some of these problems and they've complicated it by allowing people, instead of to have a particular emission in a particular year, to bank that for future years, and they've allowed Australians to bring permits in from other countries and use them in the Australian market. Now once that happens, we no longer have a cap, because what it means is that we're emitting more than we said we would, but we're paying somebody else to cut their emissions. That's legitimate, but if we believe that a cap is the goal, is the holy grail of the exercise, the CPRS has already moved away from having a pure cap.
Can I just pick you up on that point? Part of the government's rationale for the sort of scheme it's opted for is that it'll be able to link internationally, and ultimately the hope is that, like the European Union, other countries will go down a similar path and have an emissions trading scheme. And the cheapest way to cut emissions is to link as broadly as you can and then find the cheapest option. So if we can cut emissions more cheaply in a developing country, then climate change is a global problem and that's the best way to approach it. Does that argument have legitimacy?
That's a legitimate argument if you start from the premise that everybody has a cap, that we know what it should be. But the other way to start the argument is that the emissions that we're trying to target is actually global concentrations, not global emissions in any particular year. So think of it like a bathtub. What matters for the climate is when the water overflows the edge of the bath. It's not so much how quickly the tap is running or how quickly the water's leaving the drain. And so what we focus on really is concentrations, or the amount of water in the bath. What the government and what the IPCC and what the global community is negotiating is the rate at which the tap is flowing. Now, you can negotiate that because obviously there's a relationship, but secondly, how you divide that up across countries is completely open to dispute. So we take a target, we divide it across countries, and we discover that the way we've divided up that target is inconsistent with cost minimisation, because in some countries it's cheaper than other countries to reduce emissions, and so therefore you say, well, let's trade. My argument is, well, why start with the artificial cap? Why don't we say everyone should pay the same price of carbon? There is a price at which the globe is willing to pay now for insurance, and move that price over time until the bath stops overflowing. And so in other words, instead of trying to unravel the negotiated outcomes, which are arbitrary, by letting the market unravel the mistakes, let's start with what we're trying to do in the first place, and that is have a cost on carbon globally, and then worry about all the other issues of equity and technology transfer to poor countries through a different mechanism, because you do not want to have too many goals in a single policy framework, and that's the problem with the Kyoto Protocol, and that's why it's failed, is because we're trying to do too many things with one agreement.
Has the horse already left the stable? Are we too far down the path that began in Kyoto and now is being the same framework is being used to look for a post-Kyoto deal in Copenhagen later this year? There doesn't seem to be a great momentum internationally to move away from that approach. Is the Australian approach, or the federal government's approach that they're putting forward at the moment, make sense in the context of what else is already happening internationally?
Well, you could make that argument, but we've been making that argument every year since 1997. Let's go back before 1997. Let's go back to the Earth Summit at Rio in 92, where there was the UN Framework Convention on Climate Change was established. It is the right framework. That is, reduce emissions as quickly as we can to avoid dangerous climate change, and deal with the fact that different countries have different characteristics and the cost of doing it is important. Targets and timetables came up in the Kyoto Protocol because people wanted to negotiate something that they could see, and politicians wanted to be able to say, I promise to reduce emissions 3 or 4 political cycles from now, I'm doing the right thing for the climate. The trouble with that strategy is that it ignored costs. And the cost of reducing emissions is the second part of the 2-part problem we have to deal with. That is, reduce emissions as quickly as possible at lowest cost, which might mean doing reductions at different rates in different countries, or actually reducing at different points in time, because it's cheaper for some activities to reduce emissions in 5 years than it is today. Now, a precise target and timetable doesn't let you capture those sort of opportunities. So we've got this problem that we're negotiating a target, which in my view of the world, we do need a target. We just don't need a precise timetable. What we need is a mechanism where we can smooth costs transparently over time. So if we can reach that target more quickly than we thought, we should grab that opportunity if the costs are lower. If it turns out that we can't hit the target as quickly as we thought, we let the costs drive how quickly we go towards that target. Because frankly, it doesn't matter whether we hit the target in 2020 or 2025. The key point is that we do it in a way in which the whole world stays in the agreement. So let's look at the Kyoto Protocol, what's happened. There are 3 groups of countries in the Kyoto Protocol. There are those who ratified the Kyoto Protocol but didn't have targets, and they're the very rapidly growing developing countries. Why would they ratify? Because they want to receive the development assistance that comes with it. Why don't they take a binding target? Because they're the ones most exposed to the uncertainty about where will their economy be in 2020 or 2030. They're growing at anything from 3 to 12% per year. There is no way they can predict where they'd be in 2020 or 2030. Therefore, there is no way of knowing what the costs will be when they have to cut emissions at that time. So those countries automatically made the decision you'd expect. The second group of countries were the slow-growing, low-population growth economies of Europe, who could quite easily predict the future, much more easily than the developing countries they thought, who took on binding targets, and some of them will achieve their targets, most of them won't. And the third group of countries were the countries in countries like Canada and New Zealand that should have been able to hit their targets, but because of circumstances totally out of their control, they're well above their Kyoto targets. Canada's about 45% above their Kyoto target. New Zealand is about 24%. New Zealand in particular is a very environmentally sound country. They've done all the right things. They've tried to hit their target, but because of the growth in Asia, which they didn't expect for the last decade, their agricultural sector has boomed and their methane emissions have gone off the chart. So we have these different groups of countries. So the countries that have got targets, quite a few, Japan, Canada, New Zealand, won't hit their targets unless they transfer enormous resources to Europe to buy permits. The Europeans, some of them have hit their targets, some of them haven't, and a few countries like Australia and the US refused to ratify because they were honest enough to realise that we're rapidly growing developed countries and we don't know what it's going to cost. Now the problem is that neither of those countries offered an alternative, and they should have offered the alternative, which is a balance between maximum reductions at minimum cost. And until you put those 2 parts on the table in the negotiations, you won't actually get an effective agreement.
What are the good parts of what the government's proposed to date?
Well, the CPRS, I think, is fundamentally based on a very sensible policy, and that, as the Secretary of the Department of Climate Change has said, it's based on the DNA of the approach that Peter Wilcoxon and I developed in the mid-90s as a competitor to the Kyoto Protocol. And that is that you declare a target, you have a mechanism by which the optimum price can be determined within the system, and you try and smooth things over time. The trouble with the CPRS is, firstly, that the target is not deep enough. And so my view is that we should have a very deep cut target. Secondly, the mechanism for smoothing the costs is completely arbitrary in the sense that you give exemptions here, exemptions there, you let people either bring in permits from overseas or bank and borrow, and there's a lot of complexity and a lot of uncertainty about that. And thirdly, the institution that should be running the cost side of it, that is, who decides what the price of carbon will be in the short run, should be an independent institution like the Reserve Bank, and I call it a central bank of carbon. You do not want all the revenue in the economy related to greenhouse emissions to be transferred to the Treasury and then reallocated in an arbitrary process, and that's the 4th flaw of the approach. You want the revenue to stay in the economy in the hands of those who innovate. And so you want to design a system where there is a pricing mechanism, but the money that goes with buying and selling permits actually goes onto the balance sheets of those who innovate, not into the coffers of the Treasury for politicians or bureaucrats to allocate arbitrarily. So they're the key flaws in the strategy. The final flaw, which I alluded to, is that you don't want volatile prices in the short run. What matters for technology is the price of carbon over the longer term. So when you're investing in technology today, it's not to save carbon today, it's to save carbon in 20 or 30 years because it's profitable to do so. And so you want to have in the short run a fixed carbon price and in the long run a very clear upward rising carbon price. And the question is, how do you achieve that? And you don't achieve it currently in the CPRS as it's designed.
Isn't one of the potential catches with what you're saying is that you don't have a lot of faith, with good reason, based on what we've seen out of Kyoto, in governments to actually meet their targets? And there's obviously reasons beyond their control, for reasons they may not have met their targets by a certain time. But if we followed this path, every country would need to set up their own independent carbon bank that would need to be running with a similar philosophy to those in other countries. And given the difficulty in getting countries to agree to anything on these points, that strikes me as a particularly big ask.
Well, let's take one step back. Let's suppose we go the Kyoto route. What's required to have a Kyoto system where you allow carbon to be like a common currency traded across borders? You need the same institutions in all countries who are trading. You need the same monitoring and enforcement mechanism because remember, these carbon permits are exactly the same as national monies. It is a promise of a government to reduce emissions. Money is the promise of a government to maintain purchasing power. So to think we can standardise the accounting, the legal and the regulatory frameworks in the key countries, and let's list them, the US, Brazil, China, Indonesia, Europe, Japan, India, the Soviet Union, former Soviet Union. So to think we can standardise in that space to get the Kyoto Protocol to work is really pie in the sky. Now take what we need under my system. Under my system we would have national characteristics which would drive the national market. In fact, I want to have firewalls around each national or regional market so that if a shock occurred in, say, the Chinese market because somebody actually put too many permits into the Chinese market, it doesn't change the price in the Australian market. And what we've learned from the financial crisis is that shocks can be propagated across borders through markets in devastating ways. We can design national markets. The Australian market would be run by an Australian central bank, by an Australian regulator, and the enforcement mechanisms would be Australian, and the people who need to buy and sell permits are all within the national jurisdiction. There is no cross-border transfers. There doesn't have to be any cross-border transfers. So it's more feasible to have a national system where we can then tap into our own characteristics. So some of the things that matter in Australia, which is quite unique, is land use and agriculture. In New Zealand, it's forestry and agriculture. In Iceland, it's the fact that they've got massive amounts of geothermal energy. In China, they've got massive problems with black carbon emissions, which is an aerosol, which, by the way, is precluded from the Kyoto Protocol because our understanding in 1997 wasn't sufficient to include the number one pollutant in China. So we have, I would argue, more chance of getting a system of national approaches linked together under the principle of a common price, and it could be a McKibbin-Wilcoxon hybrid in Australia, and it could be a carbon tax in Scandinavia, but the principle of commonality of the price is what gives us the second part of the agreement. That is, we all bear the same cost burden at the margin, and we all have a target that's been internationally negotiated and which we're attempting to reach, but transparently, if it's too expensive, we have a mechanism by which we can exceed our target, and we have a mechanism by which we can go deeper than we otherwise would have. And that's the problem with the strategy of the Kyoto targets and timetables world.
So what are the key points of your proposal?
Okay, the way the hybrid works is that a country commits to a particular target and actually a notional timetable. So for example, we would say we're going to cut today by 10%, we're going to cut by 60% by 2050, and we won't have any carbon emissions by 2100. That's the in principle target which we're looking for. Then we argue that that has to be subject to not exceeding a cost threshold. So we'll cut as quickly as we can, but if the cost rises above a threshold, we don't cut as much that year. And the way to implement that is to say that we take the long-term target, we create an asset which is a carbon right with a coupon every year that gets smaller and smaller and smaller. So when a company or an individual receives a long-term permit, they see that today they're allowed to emit 90 units, But next year it's 89, and the year after, and by 20 years they've only got half as much as they thought as they had. So companies know that their rights are disappearing. Then we say that they're traded in a market, so people will buy and sell. And if you buy and sell either the whole asset or the individual components, their prices will be moving all over the place. Then we say let there be a central bank of carbon, and they're charged with maintaining the price of carbon for 5 years at a time. So if you're an emitter, you can either get a coupon from a long-term permit for this year, or you go to the central bank of carbon and get a permit that disappears this year at a fixed price. So the price of carbon in the economy this year will be set by the central bank. It's completely analogous to the way we run monetary policy, where there's government bonds in the market, and that's what gives us a long-term interest rate that people use to decide on investments. But the 30-day interest rate is set by the Reserve Bank of Australia, and you know exactly what the interest rate is for the next 30 days. So it's exactly analogous that you control the short-term cost. It's like a tax, except the revenue doesn't go to the government. The revenue goes to the permit holder, and the additional revenue might go to the central bank of carbon who's turning the press. What this means is that your actual emissions over time will be your target plus emissions or minus emissions, and the way in which the emissions evolve depend on the cost. So it's a way of bringing together the idea of a fixed price in the short run, of allowing deep cuts if they're cheap, because if they're cheap the central bank of carbon doesn't need to sell permits and you get down to the deep cuts emission promise very, very quickly. Or if it's very expensive in the short term, we're pumping out additional permits to let the price be constant, and emissions will exceed the target for a number of years. The mechanism for then adjusting if you're exceeding your target is to move up the price. Every 5 years you announce a new price. And our system would be a price announced at the global level by negotiation. So everyone agrees that this year it might be $10 a tonne. In 5 years we're not achieving what we want, we raise it to $30 a tonne. Equal price across all countries. Or you can implement it as a national system where we say we're going to try and get deep cuts, but if the rest of the world isn't doing anything or doing very little, we will set the price at the average world price of carbon for the next 5 years. And so we can actually minimise the cost of the world doing nothing, or if the world takes serious action, we've got everything in place to join. And the idea is to move down the deep cuts profile as quickly as possible. Now the advantage of this is you do have the deep cuts in the goal. You do have a way of containing costs. You do have a way of individual actions reducing emissions today, because if you take a unit of carbon out of the economy, that means the central bank of carbon has one less permit to sell. And so therefore, even though the price is constant, the emissions will fall. And so it's a way of dealing with each one of the problems that people have identified in the recent debate, of a mechanism which is transparent, which is economy-wide, which is institutionally sound, because we have an independent authority running the system, and is driven by the promises that the government of today has committed to. And we've created the property rights, which people are trading, which gets the government to stay committed. Because once they announce they're no longer doing it, these long-term permits will fall in value, and all the superannuation funds and all the corporations who own these assets will complain. And so it's a way of building a constituency in a national sense. Now remember, you don't need to trade these across borders, because the central bank of carbon is the lender of last resort. You don't need to go to China or to Europe to get the permits that are cheaper. You know that your central bank of carbon will supply them if you need them.
And it's taken out of the hands of government once the legislation's in place.
Well, the government sets the goal, the government sets the target, and the government provides the allocation up front. But there's only a one-off allocation, and that allocation is gone. Once it's out there in the system, it's out there in the system. Whereas under the CPRS, the government is going to be revisiting every 5 years and reallocating, and that's going to create rent-seeking political agitation, a lot of investment in consultants to argue for additional, or lobbyists to argue for additional permits. I want to take that away. I want to treat it like real estate contracts. If you buy a house, that house is yours. Now if you buy a house in the ACT, it's only yours for 100 years because it's a 100-year right on the land. But that's the principle, is it's long enough so that you as an investor and as an innovator have a long horizon to come up with a technology that you need to reduce emissions. A 5-year window or a 10-year window is no good if you're building a coal-fired power station with carbon capture and storage, which has got a 30 or 40-year life, or a nuclear power station which is a 50-year life. You need to have very, very long property rights. Once allocated, the system is self-sustaining.